Hey guys, and welcome back to Skillcloud Academy. Today, we'll have a look at how we can backtest a simple trading strategy using the SkillcloudTrader and the interactive brokers connection that we implemented earlier. When we're done, we will have a comparison of how $1 invested in the S&P 500 would have performed over the last 10 years compared to $1 invested in our timing strategy. First, we will learn how to set up a complete backtest with Python and Pandas with just a few lines of code. In part 2, we will add this backtest to our dashboard and make it dynamic so we can simulate the strategy with different assumptions about transaction costs and leverage. We will also learn how to calculate some basic statistics like annualized volatility and Sharpe ratio. Finally, we will set up an end-of-day job to send an alert if there is a trade signal shortly before market close so we can take action and execute the trade. In this episode, we will cover part 1 on how to set up a backtest to see how our strategy would have performed in the past.
All right, so let's find out if we can build an index timing strategy for the S&P 500 index. We will use some simple mean reversion conditions to go long or step out of a position depending on the following rules. We begin with a data set consisting of open, high, low, and close prices over a 10-year period for the SPY ETF that tracks the S&P 500 index. First, we construct the rolling 10-day high price level that we call the upper band. This is the highest price recorded during the 10 most recent trading days. Then we construct a lower band that we offset a certain distance below the upper band. We calculate this distance by taking the 25-day average of the daily price range, which in turn is the difference between the high and the low of the day. We multiply this value with a factor that we set to 2.5 and subtract this from the upper band to get our lower band. We take a long position if the index closes below the lower band, assuming that the market is oversold. But to limit the number of trades and increase our profit factor, we add a second criteria based on an indicator called IBS. IBS stands for internal bar strength and tells us how near the close price is to the high or low of the day. If the close price is equal to the high of the day, IBS equals 1, and if the close equals the low price, IBS equals 0. We set a condition to only go long if the IBS is less than 0.3, which means that the close is near the low of the day. Now let's see how we can implement a SkillcloudTrader client that creates a backtest for us based on these rules. First, we need to download historical price data for our backtest period into a data frame. We will use daily price bars, and we will get these directly from interactive brokers using the wrapper method we implemented in a previous episode. So we move over to VS Code and create a new Python file in the client folder as usual. We import the wrapper class for the IB API and the utils module that we use to define contracts. We also need the NumPy and Pandas modules to implement the backtest logic. We create our new client from the IB client wrapper and set up the constructor. We name the client IB index timing, and this is the name that will appear in the Skillcloud dashboard. Then we schedule a job to run every 5 seconds, but we will stop the client after the backtest has finished so the job will actually run just once. Then we implement a new method to run the backtest process. We may want to backtest the strategy for different indices, different time periods, different leverage, and with different trading costs, so we set these properties up as arguments. We call the getHistoricalData method in the parent class that we implemented earlier to get the data frame containing the price history. Next, we normalize the index returns by calculating the daily percent change. With these numbers, we construct an equity curve showing how much a single dollar would have grown over the backtest period if we just bought and held the index. We can create these columns directly in Pandas with the percent change and cumulative sum functions. If we look at the trading rules for the strategy again, we have a couple of measures that we need to calculate before we can implement the logic for the trade signal. We need the upper and lower bands and the IBS value to evaluate the trade signal. We can construct these measures as variables using common Pandas operators and functions. I always create single-name variables for the open, high, low, and close prices just to make the expressions more compact. Note that these variables are not single values, but arrays corresponding to complete columns in the data frame as Ryan showed in the introduction. This means that when we create the daily range variable as the difference between the high and low prices, the result will be a new array where each value is the row-by-row subtraction of the low from the high. We use the rolling operator to get the mean and max values for trailing ranges that we need to calculate the average daily range and the rolling 10-day high value. We calculate the lower band and the IBS value in the same manner. Now we have all we need to calculate the trade signal and add it as a new column to our data frame. Each time we get a buy signal from the trading rules, we will add the value of 1 to this column, and each time we get a sell signal, we will add a 0. Let's look at the code. We create a new column called signal, and we pre-populate the column with NaN values. Nan stands for not a number and is a special value in the NumPy library to represent a null value. Then we use the where construct in the NumPy library to evaluate the trade entry and exit conditions. For the buy signal, we start by evaluating an expression that corresponds to our trading rules. To enter a position, we have two criteria. The close must be below the lower band, and the IBS value needs to be below 0.3. Note that we don't use the standard Python and operator inside a where expression. Instead, we use the ampersand sign to perform the logic and operation. It's also important to use parentheses to control the evaluation order of the expression. In this case, we want to evaluate that the close is below the lower band and that IBS is below 0.3 before we apply the AND condition. If the complete expression evaluates to true, we have a buy signal and we set the sell value to 1 in the signal column. If it's false, we set the column to the same value as before, which means that we'll keep the NaN value. We do the same thing with the exit signal and set the value in the signal column to 0 each time the exit condition is true. We didn't mention the exit signal before, but we exit the position if the market closes above the previous high. We can use the Pandas shift operator to get the value from the previous day. Now that we have the signal column, we can create a column that represents our position. The position column should not contain any NaN values. Instead, it should be set to 1 for all the days that we have a long position and 0 for the days when we're flat. We can use another cool Pandas feature called forward fill to achieve that. The forward fill will replace all NaN values with the most recent non-NaN value. We create a new column in our data frame called position containing the forward filled values from the signal column. Now we can calculate the strategy returns and the accumulated equity curve that we can compare with the buy and hold scenario. So how do we do this? Well, each day that we hold a long position, we get the return of the index, and each day we're flat, we get 0. So all we need to do is multiply our position, which is 0 or 1, with the index return, right? Well, here's where we need to be really careful because it is so easy to make a common mistake when we calculate returns. Remember that we buy on market close, so on the day our signal is generated, we don't get any return at all, and our first daily return will be generated on the following day. The same happens when we exit the position. The exit signal is also generated on market close, so we will get the full return for this day as well when we close the position in the evening. This means that the return will lag 1 day compared to when the trade signal is generated. Fortunately, this is really easy to handle in Pandas. All we need to do is to shift the position column 1 step forward in time to represent the full days that we are actually in the market. Once we've done that, we can use the cumulative sum function to sum up all the daily returns. Later on, we will create a nice dashboard page where we can run this backtest, but right now we just want to quickly create a graph that shows our timing strategy and compares it to the buy and hold. We can do this with 2 lines of code if we import the Plotly Express library, so let's do that. We make a simple line plot from the equity and IDX equity columns in our data frame, so we can compare the return of our strategy, and the chart will be displayed in our browser. Finally, we need to define a job in our new backtesting client, and all the job has to do is call the backtest method. You may remember that we scheduled the job to run every 5 seconds in the class constructor, but we're not interested in repeating the backtest. We just want the backtest to run once, and we can achieve this by simply stopping the client after the job is done. If we start the service in the debugger, the client will be loaded and the backtest is run. If we take a first glance at the output, it seems we have successfully managed to reduce some of the volatility of the S&P 500 index by timing our entries and exits with a simple strategy. But we should keep in mind that a backtest just represents one single path through time, and it is deceptively easy to create nice backtests only to watch them fall apart completely in live trading. There's a lot of things to take into consideration before putting a strategy into production. In part 2, we will create a dashboard app where we can examine the timing strategy in more detail.
Thanks a lot, Julie. You can download the backtest code from our website. All you need to do is sign up and enroll in the free course, and there's a link in the description below. Please don't forget to subscribe to our channel if you like the video and let us know in the comments below what backtesting and trading automation challenges you are dealing with.